Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Historically, the final stretch for September through to December has always been considered one of the most action-packed and lucrative periods of the year for commodity traders, and so far that trend, it's certainly living up to expectations. As we move through the second half of 2022, rapidly surging global inflation, rate hikes, recession risk, they have now become three of the biggest and most explosive market-moving themes of the current economic climate. The most highly anticipated 4 days of central bank rate hikes, nicknamed the rate hike extravaganza, is finally here as the US Federal Reserve and over 20 of its global counterparts launch a coordinated rapid-fire attack on inflation in the coming week. It's becoming more evident day by day that central banks across the world, they are fighting a losing battle against rapidly surging global inflation. If anyone expected inflation to peak in the summer, the vast array of inflation data coming out of nearly every major economy in the world in the recent weeks definitely dashed any hopes that price pressures had peaked. Desperate times, they call for desperate measures, and times are arguably increasingly desperate. The persistence of sky-high inflation ripping through the global economy has increased odds that policymakers may have no other option but to resort to the biggest and boldest rate hike measures ever in history. So far this year, over 60 major central banks from across the world, they have come together in a coordinated global effort to roll out the most aggressive monetary tightening cycle since the early 1980s. And so far, those efforts have hardly made a dent on inflation. All of this points to one conclusion: the US Federal Reserve and its global counterparts now have a very valid and justified reason for taking even bigger steps to combat the most stubbornly entrenched levels of inflation seen in decades. 4 days of central bank rate hikes from Tuesday through to Friday, they're expected to deliver a historic tally of interest rate hikes totaling more than 500 basis points combined, with the potential for an even bigger tally if policymakers they opt for more aggression. Starting the onslaught will be the Swedish central bank on Tuesday, with policymakers anticipated to deliver a supersized 75 basis point hike. But that's just the warm-up to the main event on Wednesday, when the Federal Reserve is expected to announce a mammoth 100-point basis hike, the biggest increase in US rates in more than 40 years. The last time the Fed made such a drastic move, that was in the early 1980s, another period marked by sky-high inflation. Thursday through to Friday, that will see the most widespread rate hike action, headlined by the Bank of England, with Goldman Sachs predicting UK inflation to hit 23% next year. Expectations are running high that the Bank of England could be on the cusp of raising interest rates by a whopping 100 basis points at one of their next 3 meetings, and potentially that could be as early as next week. Elsewhere, in a busy week for monetary policy, other central banks from Philippines to Indonesia to Taiwan to Switzerland, South Africa, Egypt, Turkey, Brazil to the People's Bank of China, they're all expected to follow suit with their aggressive rate hike moves in a frantic attempt to not get left behind the rest of their peers in the global fight against inflation. There's no denying that we are now in a new era for central banks across the world, where lowering sky-high inflation is their only objective, even if that comes at the cost of breaking the economy. This in return has increased the odds of a global recession to be inevitable, with a long list of Wall Street banks predicting significant risk of a recession by early 2023. One reason Wall Street is convinced that this new hawkish era in central bank monetary policy could bring on a recession is that it's already caused the asset bubble it created last year to burst. Since the start of the year, global equity prices, they've fallen over 30%. Foreign exchange markets, they've plummeted to multi-year lows, whilst cryptocurrencies have crashed the hardest, with Bitcoin down over 70%, whilst other tokens have lost over 95% of their value. Elsewhere, US mortgage rates have topped 6% for the first time since 2008 global financial crisis, signaling the housing market could be the next major asset bubble to burst. Whilst all risk assets are now officially in a bear market, on the flip side, commodities across the board are now officially in a bull market, driven in part by a series of unprecedented squeezes from the energy crisis to the food crisis to the supply crisis, which combined they're whipping up an explosive money-making storm that is sending a number of highly essential commodities, ranging from metals to energies to agriculture, skyrocketing to new highs. As everything from equities to cryptocurrencies to the FX markets continues to crash throughout this year, there's no denying that commodities have proven to be one of the most reliable and stable asset classes out there. Inflation combined with global recession risk ultimately points to the following very predictable chain of events. Firstly, workforce layoffs and redundancies. This will inevitably lead to further supply chain disruptions due to global production cuts, mining and refinery closures, leading to skyrocketing logistics and shipping costs. All those factors combined open the door to a major squeeze in commodity prices ahead. The markets move in very predictable cycles, and trading is all about preparation. If you know how to connect the dots and position yourself in the right place at the right time, ready to capitalize on the next major money-making opportunities, then you will make a fortune. Goldman Sachs have already been preparing their clients for what they predict could be one of the most profitable periods of the year ever, and it's not so different for the Gold and Silver Club. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. In fact, all of our clients are already being fully briefed, prepared, and ready to make the final stretch of the year the biggest and best yet. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2022 your best year yet, then you still have time. Just go to www.jointhegoldensilverclub.com to learn more about joining our mentorship program now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So as we discussed with you last week on Platinum, we took the opportunity with our clients at the Gold and Silver Club to bank 840 points profit on the breakout that we saw to 1 month highs here on Thursday. So in fact, Platinum prices, they're now up over 10% in the month of September. As we discussed with you earlier on in the month, we saw commercials, they flipped net long into both platinum and silver. It's only the third time in 20 years this has occurred, and that created a massive buy opportunity where essentially from the lows to the current highs right now, platinum has broken out over $100 or more than a 1,000-point move to the upside. Of course, we talked you through this trade opportunity in a lot of detail. So we have platinum now trading back above $900 per ounce as we go into next week. It's been the same with silver as well. We took the opportunity at the beginning of last week on silver to book 50% of our profits on this trade as we had the biggest one-day breakout to the upside since February of 2021. So we had the biggest one-day breakout on silver in over a year and a half. You can see here where later on in the week it dipped after we actually took profit off the table at the start of the week when we had a bank holiday in China, which caused an exaggerated move to the upside as well for silver. We've then started to see it dip later on in the week, but broke out back again, back towards its daily highs here on Friday. And in fact, at the moment, silver is currently up 9.2% for the month of September. Again, we talked you through this at the start of the month where commercials, they also flip net long. Like platinum, it's only the third time in 20 years this has occurred, and we've seen a slingshot move higher here for silver, and very much like platinum, also got a bid into the close. This is also relevant for copper as well, where we currently have 4 positions. All of these trades are protected, but it also broke out 2% into Friday's close. Now, moving over to gold, we highlighted this in detail to you on Thursday's report, the fact that gold had broken all the way down towards that 1660 level, massive buy opportunity at that zone to accumulate at lower prices. We've already seen into Friday's close, gold managing to break out 1% to the upside, trading back at 1,674 US dollars per ounce. Again, feel free to go back to Thursday's report, also the YouTube short that we made on this as well, highlighting to you a massive opportunity on gold when it was trading at the 1660 level. So of course it's trading 140 points higher than that at the moment into Friday's close. So there's been a great opportunity on that already where you could have sniped in to this position. Now we've broken down back below the 2-year lows. However, we've also seen similar here recently with silver where it broke back below the swing lows and then it catapulted higher, breaking out over 9% in the month of September. We also saw similar on platinum where it broke back below the swing lows, then essentially it's found support. We've had a slingshot move higher here, breaking out over 10%. And what tends to happen is when you are breaking through a key level of support like this, many traders, they're getting ultra bearish after a key level has been broken down. They start selling into this market, they liquidate their longs, only to then just get caught in a bear trap and the market moves against them massively. They get squeezed out of a sell short or they're left flat with no position as the market is slingshotting higher. You've got a similar price structure on gold here at the moment where you've broken back below the swing low. There's many bearish calls for the market to break down much lower, but I would watch out here because as we go into next week, as I talked you through, multiple central banks are due to increase rates going into next week. And we also have a public holiday in the UK on Monday on public holidays so far this year. You can see big exaggerated moves to the upside. I'll give you an example, just going back to the Jubilee holidays that we had at the beginning of June here. This was the Jubilee Day holiday, public holiday that we had back in June, where we essentially broke out 5% to the upside on copper on a public holiday. We had an extremely bullish move to the upside. It does tend to be during periods of thinner liquidity where you can see exaggerated moves in the market. I wouldn't rule that out for the metals as we go into next week. Taking the opportunity here to scale into lower prices here as well on this market. Alongside, we've got 2 positions on platinum. We've got our 4 positions on copper at the moment, and we also have our position on silver down at $16.79 per ounce. So I see some big opportunities with these markets. Again, next week is likely to be explosive for the metals here. We have a number of central bank news items. Of course, the FOMC Federal Reserve statement is going to headline next week, which will be on Wednesday. You want to watch out for that interest rate hike, and also afterwards the press conference with Jerome Powell. We are seeing one of the greatest wealth transfers ever in history in this new era of economic change, which we find ourselves in right now, with rapidly surging global inflation, the cost of living rising, energy, gas and food bills all soaring. It's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, it's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there's no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain the ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy and the highest levels of profitability. Trading like every other misguided retail trader out there, utilizing outdated technical analysis and gimmicky technical indicators that will not work. We're no longer in the 1980s, we're in 2022 and the age of data. Every single industry right now, including the trading and investing landscape, is being disrupted by data. In this day and age, if all you're doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in these markets when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join a community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.